What's popping, Jay? So we are back here with a quick XAUUSD review. Remember, we have a very spicy week. Tomorrow we have the biggest announcement, probably. It will be big because it's federal fund rates. You don't always have this news. But as mentioned in the Sunday analysis, we expect the Fed to keep the same, 4.5%. So any change will be a very volatile move in the market. So it will be reflected very spicy, we could say. Then we have these statements and the press conference where they share a lot of not tips, but hints of the future of the economy or how they see or view the current state of the economy and what measures can be taken in the future. Also, I want to see if they talk something related to Trump's policies or comments about the economy and how he plans to take actions by himself. Also, we have the unemployment and also very important GDP. Let's track it. Expect to be at least some midpoint between the forecast and the previous, so we can see some recoveries, the unemployment claims and the employment as the NFP came higher. We could argue that if we start receiving more positive data like 2 months, like at the initial of the beginning of the month, and of the year, can expect gold market to react to the downside because currently we have this current top of the week. That's the closing of last Friday. But also, I mentioned in the analysis that we were very close to the all-time high, roughly $5 or less. So you can see the all-time high is here printed at 27.90 in this broker, that is Oanda Ticks. So more or less, that's the all-time high price we'll try to chase. But we needed a healthy retracement. We had this substantial retracement, but we really don't have something with volume, or this looks more like indecision or sessions. Like as you can see, this is Asia, during Asia and London. So the push or the hit starts again during New York Open. So we can expect this to be the real retracement because here we have very big candles, but this move is also pushed by all the DeepSeek drama with OpenAI, and it reacted very incorrect to what I would assume if it's something affecting the USA. So for me, this is a retracement. Price needed a healthy retracement before going up again. This is a zone where we can take a lot of liquidity, especially this area at 27.32 roughly, but the whole area will be 32 to 17 that we have the triple top. That price took time to break in the past weeks or months. It started since the second rate cut in November, so price is really trying to go down and reevaluate so the dollar can at least put some pressure on gold prices, because let's not forget, if this AI war is real or not, even if DeepSeek managed to do something with $5 million that OpenAI wanted to do with 500 billions, the gold will be used in manufacturers or in industry all the time. Like, this is something that won't change. And of course, the dollar as the liquid coin will be always in exchange. So we, at least as an investor, I will expect a new all-time high, but price also needs to reevaluate. And the first area to reevaluate the price is this red area. From there, we already range here a lot of times, so price can get a lot of liquidity to move very quickly to this other zone that will be around 584, or I would like to target this low, because we target every possible liquidity in the past months, but we didn't touch or were close to touch this area. And as you can see, after trying to retest here in 84, we got this big bullish cycle. This is the biggest bullish cycle so far after the bearish momentum that created or generated by the first interest rate cut and the Trump election. So pretty much we could consider that here is the exhaustion after the first cut. Then we get the indecision for the USA elections, and that combined with the second rate cut because we also missed the one in October. So in November we had the second one and the third one by December. So that's what created the double top and sent price again lower. But really the pressure compared to the first move is nothing. So this is really some indecision ranges. So I will expect for price to at least, it will at this point will crush the all-time high. Like dollar is not very attractive also with people trying to get into Bitcoin at a lower price. You could assume that investors are waiting for a better price also to start loading dollars, because bonds also are not very attractive, are very low 1 year and 2 years. We are not even close to the 5% in any of the years contract. So really the most attractive assets right now will be Bitcoin and gold. Of course, gold will be always attractive if we consider dollar as weak or that can have troubles in the future. So very much the only area that we target as bulls is the 2790, and from there it's only 2024 similar price action where we will have multiple all-time highs until USA drops a very big news of recovery or data starts showing real recovery and rates starts going down again. We will get a massive push to the downside like this one during the November election period and the rate cut. But for now we can assume we will have sustained trends to the upside, breaking multiple all-time highs, but with less volume or less pressure as in 2024, because the situation or the panorama in 2024 was that rates were going to be cut at least between February and March, but we had to wait all the way to the last quarter to really get those cuts. So all that time that Fed didn't cut the rates generated a lot of it's pretty much FOMO, but big investors know that it's very easy to predict. They're not reducing the rates is because something bad is going on, or maybe something bad can happen, so they're trying to prevent it. And you won't naturally put your money in dollar or in the USA economy. You will go to the hedge that is gold. So that's why in 2024 we got multiple all-time highs and a very bullish trend, a very sustained bullish trend that pretty much ended here in October with the all-time high, and that's our target for now if we consider bulls very strong. So that will be it for today. It's a very quick analysis but complete in information. We don't try to predict or to give, hey, price is going up or down, because I myself am a hedge trader, so I just react to whatever price is doing and make money both sides. But keep your eyes trained and your charts marked, because there's important levels that you need to consider. Even if you're scalping or sim trading, you need to consider everything. Unless you are going 5 minutes or 1 minute or less scalping, that's just gambling, and of course no analysis will help your case. So just for the real traders and investors, this is the sauce.